What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. Um, Today, I'm going to give you some initial thoughts, just my first impressions of this site, Fractional.app. It's a new platform. I just discovered it yesterday or the day before, spent some time digging into it, looking at some of the deals on it, um, watch a couple of YouTube videos about it, but just want to give you my first impressions and what I've found so far. I have an appointment set up with one of their concierge people who is going to hopefully make a few things more clear to me. But I did just want to put this out there, and then also just ask: have any of you invested on here, or are you active on here? If so, please, either put it in the comments or jump into the Discord. Before I forget, please do like and subscribe. And I do have a link in the description below to our Discord group, which is just the generic fractional real estate investors Discord. Anybody on any platform that wants to jump in there and talk about investing in pieces of real estate, feel free to do that. I'll also have links to all the sites that I'm already invested on that I might mention. Um, which in addition to that, at the end of this video, I'm going to give you a brief update on my investment in the student housing deal I bought a little piece of on Collab. It's really just a tiny bit of info, but I want to jump into this first and then tell you about that one at the end. So what is this platform? It is a lot different than like Lofty or Mogul or Arrived or any of the ones that we've looked at so far. I can't just log into here, find a property and click buy, right? It's not, it's not like a shopping platform for real estate deals. It's much more of a, um, they're providing two functions. They're providing a social media slash community function, a way to network and get in touch with a bunch of other people. Some of those people might be providing some services into the purchasing the properties, and some people might just be putting money in. But they've sort of created this environment where you can meet basically partners. And then on top of that, what they're doing is they're providing the framework for those partnerships. So it seems like they're I don't know if they're actually drafting the partnership agreements for you, but it seems like they definitely have it set up so that you'll fund your deals through the platform. Um, at least your initial deposit. Maybe it looks like they're ACHing or wiring. So maybe directly. Beyond that, I'm not sure. Um, and so, one of the things before you sign into it, when you're just setting up your profile, it asks, well, how much are you committing to buy, or how much, are you interested in investing, or something like that. How much could you commit right away, or over what time period, whatever it was. Um, the minimum you could put is 5,000, which, I think it's relatively reasonable because of the setup, right? You're not buying it's not a site like Lofty where you're just breaking a property up into thousands of tiny pieces. It's more set up for people to, um, it seems like it's more of a community. You're investing with people that you know the other people that are investing with you is sort of the goal. Um, one of the things I'm on their communities tab, they have a bunch of different or a couple different communities, some of which are private and you have to apply for membership. Several of them are public, and so I did some lurking in there. Um, One of the things that I just wanted to mention, this reminds me, it's very much like how, in real life you have all these different real estate investor groups out there, right? Like the real estate investor associations and all, everywhere I've lived, there's been at least a couple different meetups and groups and going back quite a long time, even 25, 30 years ago, these things existed pretty much everywhere. And they're really like a mixed bag and, probably longer than that, but I don't, have any knowledge of the industry before that. But some of them that I've been involved in are like fantastic. They're a small group of people, but everybody's willing to share their resources. You share contractors, maybe agent info, lender info, people investing in each other's deals, and it's really fantastic. And I think that's their goal, is to try to create that sort of environment. But you also, that's more of the rare one that I would find. Most of them that I've been to, it's like they're put together by a couple of vendors who are trying to make money, or it's something that one or two people put together to really just raise capital for their own deals, but they're trying to like make it just seem like, oh, this is a networking group and anybody can do it, but it's, there's like an in group of people, and that's really the only people that get the money for deals. So my initial thought is it's probably going to be kind of like that on here. Now I don't know, I don't know what you have to do to be able to create your own groups. That's something I'm curious about and will want to look into. But so I guess I mentioned that about the real world groups because one of the things I found is that they, trying to use that community and education piece, there's a lot of, what I would think of as like more like, snake oil salesman, hustler type people that use that angle to raise money from investors that don't really know the difference between a good deal and a bad deal. And I'm a little bit worried that there's some of that going on here, just based on the first couple of deals I looked at. They weren't terrible deals, but the way they were presented, um, I think it's tough to know. Sometimes whenever I'm doing this, it's always hard to know like if the person bringing the deal to the platform really doesn't understand, or if they do know what they're doing and they're just trying to, trick whoever the investors are, right? And I say trick, I mean, I don't think so. I'm going to show you one that I looked at. So, um, this one owned 25 co-living rentals in Georgia. They're not trying to hide this fact, but it is just three properties, right? It's 25 bedrooms total. Three properties, total of 7 units. It's 25 bedrooms. A lot of the co-living people start to talk about their, um, how many bedrooms they have, but just saying 25 rentals right off the bat, it rubs me the wrong way, right? Like to say, it's three investment properties. It's that are rented by the room. Um, but that's fine. Let's get beyond that, right? But that's sort of what I'm talking about, right? Like I think that, especially because it's a platform where everybody's trying to attract other investors, I think it's probably going to be prone to this sort of salesmanship that I think just really has no place in it's what I don't like about platforms that are trying to sell you an investment, right? Like I want to just know what are the facts. Don't give me any spin on it. And so, that I think is really minor, but it was just the beginning of what got me there. Uh, you know, but it's the math. They tell you about what a pad split is. This is a rent by the room property. They're in a market that I like. I mean, there's a lot I think that you can like about this deal. But then the way they present their numbers, just this is what made me really think. Okay, your total fractional ROI. They're saying you're making 100% return, and then I watched part of a video about this, and he's like, oh, it really could be higher if we juiced the tax benefits. And I was like, oh, wait, what are you talking about, right? Because usually whenever we're analyzing returns on deals, we're doing it before taxes, right? Like because everybody's tax situation is different. You know what yours is, and you're gonna, you should be looking. That should be a layer that you look at on top of analyzing the deal. It shouldn't be part of my ROI, right? But so this is what they're doing here. They're saying, okay, we've got our cash flow, we've got our appreciation, we've got our debt pay down, and those are all legitimate parts of your return, right? Especially if you model a sale, which in here they're not really modeling a sale, but that's so and by doing it this way, you're avoiding modeling closing costs in your sale, and so that makes your return look a little higher. And then they say, um, tax benefits, and they're assuming a 24% tax bracket. So basically, they're saying, oh, and we're going to save this much in taxes. So, and then they're baking that into this 100% ROI that they say. But this is 100% after 5 years, only if, excuse me, if you're including their taxes in there. And then they go on to say, well, that's a ROI of 20% yearly, which is, if you are doing guerrilla math, it's true, right? Like 100 divided by 5 is 20%. But anybody that does any sort of analysis of their deal is going to look at compounded returns, right? And so it's not. It's not a 20%, annual return. And so, and I see this stuff. There's a couple of groups out there that really target newbie investors that use this exact type of math. And so it's possible that that's just what this person learned, and they don't realize that that's not the way that you know, it's not the standard in the industry, right? Like in real estate investors, this is not how anybody would expect to, I say that. This is not how most professionals would analyze a deal. And so it's being done in such a way to sort of inflate that deal more. Uh, when I actually, assuming all of their cash flows were right, when I looked at this deal, taking their assumptions at face value, but then putting it into, doing an IRR where we actually, assume a sale at the end of year five, which includes some closing costs, but then they get all that appreciation and debt pay down. Looked like the internal rate of return would be somewhere around 14 or 15%, which is not bad, right? That's not a bad return. The cash on cash was closer to 4%. Um, and so that's a little worrisome, right? Like, okay, how are we getting 14% return if we're only going to have a 4% cash on cash? Well, and the reason is they're baking in just a ton of appreciation into this deal. And in year one, $631,000 of appreciation because they're saying you're just walking into a bunch of equity. Now, I think it's possible that you're buying into a deal from them that has equity in it, but to show that as year one appreciation seems really strange to me. Um, and so uh, eh, I don't know. So I think okay, if I'm looking at a 4% cash on cash return roughly, and a 14% IRR, and if I'm comparing that to some of the other options that we have in the world right now, like recently bought properties on mogul that have it's again assuming their assumptions are right, right? I mean, that's the thing, you have to dig in and do the due diligence, but you'd have closer to a 7.5% cash on cash, and then a similar or maybe a little bit better um uh internal rate of return, right? Your total return. And so it's not very attractive from that standpoint, which I think they probably realize, and why they present it in this way, right? Where they say, no, it's 100% return and it's 20% per year. Um, I don't know. I mean, so I really didn't like how this was presented. I think it is, um, I don't. I think it's short of deceitful, right? But it is they're trying to. There's a little bit of obfuscation going on, right? It's not perfectly clear what those numbers are. And like I said, I mean, I don't necessarily know that this person um realizes that this is not how people do deals. Maybe this is how they learned, and they don't realize that this is just a really strange way to analyze annual returns, right? I mean, I don't think it makes sense to do it this way, because then when you try to compare one deal to another, you're never, uh, it's not going to be right, because you're going to be like, oh, well, I got a 20% return. Well, you didn't get a 20% return because of the way compounding works. It's definitely smaller. And then again, like, why are we adding our tax benefits into that return? Like it just doesn't make any sense to do that in, when you're doing your deal analysis, right? Like, and, I don't know. Sometimes I start to look at some of these sites, and I think that I'm a little bit of a snob when it comes to like financial analysis. If you've watched my videos before, you probably know I started off working at two different publicly traded REITs. Those were my first two jobs in real estate. And so I did this sort of analysis on deals, and so learned a certain way. But then I moved over into doing a lot of deals with private equity investors investing in real estate, and they do the same thing. I mean, I think that it's pretty much across the board until you get down to the level of the people that are trying to raise money from sort of mom and pop investors, or from retail investors, like just people like you and me that are trying to buy into somebody else's deal. And then all of a sudden you start to see a lot of this weirdness, a lot of giving you these huge ROI numbers, but like, I mean, this is just not like when I don't know. It's not how anybody that is trained in this industry would think about a deal. And I think it doesn't, I think it's very much not useful to think in these terms when you're trying to compare one deal to the other, unless you happen to be in a situation where, you have, um, both are for the same exact time period, right? Like if, okay, if both of them are a 5 year deal and then they both are 100% in 5 years, well, then that makes perfect sense. But if I start to look at some deals like this, and then I look at one that's two deals or one that's a long-term hold, like then it doesn't make a whole lot of sense. And like you could just keep doing this, right? I could say, well, okay, let's model out 10 years, and then did I make, is it a 200% return deal? Like, I mean, that just doesn't, it's not how, um, it's just not how math works, right? It's not how returns work. It's not how anybody thinks of them. So I don't know. That bothered me a little bit. And what shocked me after watching the video and looking through the numbers is that they have more money committed than they needed, right? So, um, and like I said, I mean, I don't necessarily think it's a bad deal. Like when I go back, if their numbers are correct, right? If all of these assumptions are correct, you're still not getting terrible returns. I mean, it's not great cash on cash, but it's pretty good internal rate of return. The appreciation is doing a whole lot of work there, so you have to believe that. But if those are accurate, like just tell me it's a 14 or 15% IRR. Like that's not, you shouldn't be ashamed of that. And so that's what makes me a little bit worried when I see stuff like this. Um, but I mean, this is just the first one I looked at. This is actually one that somebody else had sent me. They said, "Hey, I'm on this site. This is something I'm looking at. What do you think about this deal?" It's kind of hard for me to understand. And when I look at it, I get why it's hard to understand because this is not how, um, this math is just not how people normally look at returns. So I think that it makes perfect sense that the person was like, "I'm not sure what's going on here." Um, and so it's tough. It's tough to know, like, is this intentional to just try to make this look attractive when it's not nearly as attractive, or I mean, like I guess if you compare this to an arrived homes deal, it's pretty similar, right? I mean, it's now you're taking it might be a much different risk profile because you're having to do a rent by the room to get the same kind of yields that they're doing on, long-term rentals. So, maybe, keep that in mind. But then again, and that's from the cash on cash return perspective, right? I mean, I don't know that Arrived really, well, I guess they do, try to model out their appreciation too. And so they very rarely show you deals that look like 14, because they don't have so much appreciation baked in there. So I don't know. That's all I'm going to say about this one. Like I said, I mean, it could be, it's just a weird way to present it, and it's not, you know, I just don't like it. But I mean, I think if you've watched me watch, but so again, though, it's not Fractional.app that's putting these numbers out, right? This is like one person who's created a community on here and put a deal on here. And so that's one of the things that you have to really think about. Like, this isn't going to be like Mogul, where, every deal that you look at was put together by the same couple of guys, and you're just getting to buy into each one. Um, it's a little more like Lofty, where they have different co-owners bringing properties onto the platform. But even there, it seems like there's a little bit more standardization as far as how it's presented. Although, if you've watched my videos, I don't really love a lot of the math that they do either. I think that it's different problems though, right? Instead, they're just giving you a bit less projections for that sort of thing, but also to, doing some uh, just what I think of as being really wonky math when you compare it to like any sort of, traditional real estate investor math. So I don't know, yeah. That's all I'm going to say about that. But then, so that was the first deal I dug into. So that worried me a little bit, right? Like, I mean, but again, it's just one deal that one person put on this platform. It's one of the few. So like when you look at projects, though, there are very few public projects. And so I think that what happens is people have to share specifically with you, share with all following or managed by me. So I think that if I, for example, get access to certain groups, I might be able to get shared more deals. And so I don't know, maybe deals that somebody's willing to share with everybody um, might tend to be, uh, you know, maybe they were having a harder time raising money in their small group, and I don't know. But it's like I said, I mean, there's not like I can just jump in here and look at a ton of deals. I think it's going to be one that I'm going to have to spend some time communicating with people, joining groups. So again, way different from the other platforms we've looked at so far. I think it's possible that you can jump in here, find the right community, or maybe make one of your own if you're someone who's doing some stuff in real life, or if you want to take a pretty active role in it. And I think you're basically just working inside of their framework. So I think there's some potential there. One of the other projects that I saw though, and I don't know even how I got to it actually, because I don't see it on here. Um, but it was, well, I'm going to just show it to you. It is, um, taking this motel and converting it to multifamily. And this is in our Amarillo, Texas. Um, this is, this type of conversion, and I don't know. I don't know anything about the guys who are proposing it. Maybe, maybe they have a great track record and have done this a bunch. I didn't get that sense from the thing I saw so far, but like I said, I mean, I haven't done a deep dive into this, but this is the type of deal that sounds really like a no-brainer on paper, but that I've seen investors screw up so many times for a couple of reasons, right? Like one, and they actually in the video that I watched a little bit of a video that they were talking about it. They addressed this that it's you have to make sure the zoning's right, right? Because those are two different uses, motel versus apartments. And I think that when they were talking about that, they addressed that pretty well. A lot of these towns that have these old motels do want you to do something with them. But the bigger problem is actually the physical, physically turning these into apartments because they're typically built on a single meter, right? Single electric meter, single gas, single water. Um, and so, breaking that up is a much bigger expense than I think a lot of people. So I've seen some people try to do these projects and really just get stumped on them. Um, you know, further down the line because they didn't realize how much it was going to cost them and how timely it was going to, how much time it was going to take to break out all those meters and whatnot. And so it worried me a little bit. This particular type of deal, right? Because it is one that again I've seen people that want to get into multifamily don't really have the capital to get into more legitimate multifamily properties. Pick these up either with owner financing or with just got them super cheap because they are an asset that's not widely sought after. Excuse me. And then run into all sorts of problems. And then the most recent one that I can think of, um, it is now sitting vacant again after somebody uh, spent a ton of money, and then I don't actually know what happened at the end. I tried to help them early on, and uh, actually tried to encourage them not to do that deal. So I'm not sure. I don't know whatever happened with it, other than I know it's still vacant. Um, I'm not saying that I think this particular deal is necessarily bad. Like I said, I mean, I didn't dig into it too deeply, but what worried me about it is it's the exact type of deal that I see that really attracts novice investors. And so that is one of the things that you see in some of the different groups that I've seen, some of the real life, groups in real life that I think could end up being mirrored on here is where you have like a bunch of people that are excited about real estate and they team up with other people that are excited about real estate, but no one in the team really knows um, anything about real estate. And I'm not saying that that's what's happening with that one. Oh, actually, did I find that deal in here? Is this where it is? Um, yeah, this is where that deal was. And like I said, I mean, I didn't analyze this deal. I don't know necessarily that this is a bad deal or a good deal. Um, just it's just not. If I were going to encourage a group of newer investors to go find other deals to be part of, this is like one of the last things I'd encourage them to do, right? Like go flip a house, go buy a small multifamily, maybe a value add deal, but like the, this is the last thing that I want to do, want them to do. Now maybe this guy, this whoever's running this group is really experienced and has done this a bunch of times before, um, and like I said, I mean, I didn't really dig deep into this one, but even if that's the case, I think that a typical person who jumps into this platform to want to invest with someone else I just can't imagine they have the knowledge and experience yet to decide, is this a good deal or is this just an idea that sounds like a great idea, like I don't know, but that is really just full of pitfalls and um I don't know. So that worried me. Those were the only two deals that I really spent a little bit of time on. The first one, obviously, I did a lot more, and the math of it bothered me. That one just the type of deal, and then a little bit listening to them talking about it made me worried. Just because I know that it's really ones that I've seen it in a lot of different places and times where every time there were people that were turning these into just running them as Airbnbs, and I think that can work if they're if they're in good locations. They're basically still just a motel, but they're using Airbnb to sort of fill them, and then they make them kind of cooler than they had been, and whatnot. Um, that's a way I've seen this be repurposed that actually is a little bit more successful. But yeah, every time I've seen someone try to do a real multifamily conversion, um, if you can get the zoning for it, I think you're almost always better to just scrape that and build multifamily. I mean, like, yeah, I don't know, just because you're not really getting a lot from this because of how you have to go back with metering, or maybe they're not going to be separately metered, and then that's terrifying to me because I'd never want to rent to tenants and I'm responsible for their water and electricity. Anyway, that's the only two deals I saw on there. Oh yeah, I do still have to get to my collab one. Um, I think that I'm still going to jump in here. I'm gonna at least talk to the concierge. I'm gonna see what else I can learn. It also seems like there's like some subscription, but nobody's presented me with a price or anything for that. And then there's some points. So if anybody is on here and they really understand how this stuff works, definitely please let me know. Like again, I mean, this is just my first impressions. Um, I'd be excited to find out that I'm wrong, right? That this is really, I just happened to look at a couple deals that immediately rub me the wrong way, and that's not what most of them are like. And there's a lot of people that are successfully closing deals on here. Like I would love to hear that, and maybe that's the case. And I just happened to, like I said, I mean, there's only a couple of projects that showed up here, and then when I clicked into the communities, I just happened to, a lot of these are private, and so I didn't try to get into any of those, and it was just one of the first ones that I looked at there. So I don't know, maybe there's more to it. I really think it is probably a case where some of these groups, and so if you connect with the right people, you could actually do really well. Um, but if not, I think you just have to be really careful, do your due diligence on the individuals who are running the communities that you join. Do obviously, like we always do your due diligence on the properties. That's all I'm going to say about that. I think, but please do let me know if you know more about this platform. Jumping into this collab deal, if you remember, I bought this was a rent by the room student rental. I bought just a tiny piece. This was their minimum investment on this one. Um, this is all student housing platform. Uh, I know when I did the video on this particular property, I wasn't really certain about the finances. I have since gotten some clarity, but you can see, my first monthly distribution is 36 cents. If I annualize that run rate, I'm going to make about a 1.5% return on this deal, cash on cash. I know this is another platform that's very heavy, assuming appreciation. But this is supposed to be a 7 or 7.5% dividend, which, they did say that the expenses were like a water bill that had been not paid in a year. So it was, like a $4,000 water bill or 2,000, and then some repairs. So like supposedly non-recurring expenses, although in the future there will be more water bills, but just not all at once. So I don't know. I was not very excited about this. I didn't really love the way, the email gave me really no info other than you get a distribution. It's 36 cents. Like I just, you've heard me complain about all of these sites. I just want more numbers, right? And I think, okay, maybe. Oh, wait a minute. Monthly update. No, these are the same ones that I looked at before. Yeah, yeah, this is that same one. So, I don't know. I know that I'm not like the typical investor in a lot of these, right? Like, but as far as maybe I'm a little bit more of a numbers nerd than most people. But at the same time, if I want to see that stuff, I should be able to find it. What was this? Transactions, funds received. Just making sure I didn't just click and show you something that I shouldn't have, but I don't think I did. I think I should be able to see the actual operating results, and I think that's kind of what they're trying to show you with the statements, but it is pretty sparse. And I think that one is this one even show, or is this the one that has? Yeah, I mean it doesn't have line items. It's got no real detail other than total revenue, total expenses. Okay, we lost money for the quarter, and so why am I even getting a monthly distribution, right? Like, I mean, that seems strange. Um, I don't know. Maybe it's not based off of last quarter. Maybe it's based on the current performance. But so, yeah, very unimpressed with collab so far. I really want it to be good because I do like student housing as a asset class. I have asked some questions in the Discord, and I got an answer. They have one set up, and I got an answer to one question, and then my other one's been sitting there for like 12 days now with no response, and nobody's typed underneath it either. So it's not like it got lost. It's just not a very active Discord. I know they have this here, and maybe I should use it. But yeah, so far it's a very underwhelming experience with them. I think if you watch my video when I bought this one, I wasn't really that excited about it, but I wanted to just be part of this platform to see if maybe I could get a little bit more info, and so far I haven't. Um, I think that's going to be it for me for today. Uh, yeah, I did that thing. So in any case, until next time, and again, I could be mistaken about these, right? Like, I just want to point that out. Like, really just my first impressions, just the first deals I've looked at. I mean, I do feel pretty strongly that the math on this one is um, just silly math. It is, if, back when I used to I worked for a company that helped raise money for larger investment deals. And if we ever had gotten that sort of math from someone, from a potential client that wanted us to help them raise equity, um, that would have been someone who we just wouldn't have hired. We wouldn't have worked with them as a client. I mean, it would have, like it does. It's worrisome to me that somebody with that sort of presentation was able to sell out of their deal. Um, I don't know. That just my first impressions. Like I said, I mean that person could be wildly successful. Maybe they've done a whole bunch of these deals, and that's one of the things that's really interesting about real estate is you can do really well in real estate without fully grasping how equity investors look at real estate deals, right? Like if you're just somebody who's gone out there and done deals and you're making a profit and that's how you've been calculating it for yourself, and you never had any sort of training as far as like on the finance side, you might be perfectly happy looking at deals like that and successfully operating large portfolios. I mean, I've met people that have hundreds of units. I actually knew a guy who had thousands of self storage units that like his math was, pure gorilla math. Like, he was a client of mine and I trying to get him bank financing at one point in time, was near impossible because the way he looked at things, um, was just not how anybody would look at it. But he was a wildly successful investor. He came up with his own way of looking at it, and that worked for him. So it's not that it necessarily means that that's a bad deal or that investor or developer who that brought the you know like I said, I mean, I never know, like, do they not know that that's not a normal way to present it, or are they doing it on purpose? Like that's always my worry. And so, I'm not saying it is one way or the other. It's something that like I'm just not going to invest in deals that's the way it's presented to me because it makes me think that one of those two things is going on, and either one of them I'm not super excited about. I think I've said that in a number of ways now, trying to just not be too critical because, like I said, I mean, new here, gonna try to jump in here and make some friends. I'm sure nobody's gonna be happy if they watch this, and then I'm doing deals with them. I do run into that problem because I tend to be just really tell you what I think, completely. And if it is, sometimes it's not what people want to hear. That's really enough. All right. Until next time, I'm just going to keep making mistakes so that you don't have to.